Okay, August 21st here with the Mobile Mailbox Money Mastermind. We're here today with our capital partners, investors, private lenders, hedge fund managers, real estate specialists, fix and flip, and lending partners. Here today, providing capital investors stability outside the stock market in contractually agreed upon terms and stability for double-digit interest rates backed by collateral. In other words, collateralized lending opportunities. Today is brought to you by Silvercrest Opportunity Fund, providing accredited investors a 506c 3c1 fund for 10% returns for terms as low as 1 year or 12% for 3, and an income-oriented investment strategy, investing like Warren Buffett in affordable housing. Quick little house cleaning here. What have we had going on this week? Well, I'll tell you, we were at the Inland Empire Real Estate Investment Club the other day in the Inland Empire, and met up with Goodwin Yee, Andy Teasley, and the Fire Center Group. Actually walked away with like $200,000 in soft commitments in lean positions, providing our investors a passive rate of return. Those investments are personal LLC investment with one partner, and another with an IRA. So did you know you could direct your IRA and assets just like this? Actually seen below and seen of us debuting here today with Mobile Mailbox Money and Silvercrest Opportunity Fund. Today, we have multiple deals immediately available. We'll kind of get into the specifics of what's available right now, from first liens and second liens, all passive rates of return, depending on what kind of term you want. Even if you're non-accredited, we could get into hypothecation for terms as low as 1 year, providing collateral and double-digit interest rate, performing in high equity upside or double underwritten assets, providing double-digit interest rate. So I asked our partner Jason and Todd to bring on some backdoor deals that we have going on right now. I think people are failing to understand that this is literally golden nugget opportunities at the end of the rainbow, not seen out in the available marketplace. We're literally showing you inside the back screen door of high return on investment opportunities not seen anywhere else. Jason, appreciate having you on the mastermind, our weekly mastermind. So this is done every week, once a week on Thursdays at 12 o'clock Arizona time. Same link, same time, and different deals provided to you viewing today, passive investors. So Jason, let's kind of dive into a couple of the seconds that we have. And these are, time is of utmost importance, people. Not only can you buy your time back with positions like that, providing you the income you need in order to go spend more time with your family and your friends, travel across the world, and still receive the income that you need in order to do so. But these deals have an expiration. So if you see a deal here today that you're like, man, that seems like a great opportunity, we need reach out. We need correspondence immediately within the next 24 hours. And you can contact us direct today at 602-888-2274, or view these notes or notes just like them to make a reservation with mobilemailboxmoney.com. Jason, appreciate having you on the channel today.
Absolutely. You want me to share my screen or just talk through these?
Go ahead and share your screen. Let's give them a view.
All righty. Let me do that real quick. All righty. So I'm just going to go through three or four here real quick, just kind of give you an idea what we do. You can see this one right here. This property is in West Palm Beach. This is a basically going to end up being more of a fix and flip kind of situation. It will have a second note. There's opportunities in this one to pay off the first if we wanted to, but he's got a really good interest rate. And that's the challenge when you're trying to, get into a first position. Somebody's got a 3.5% interest rate. They're not gonna want to switch over to a higher interest rate. But in this specific case, the guy owes, let me see here. He owes $200,000 on the first. He needs to renovate it. So we're talking about a $50,000 second. we'll help him renovate this property and get this thing sold for him. And you can see right there, his estimate's about 444. It's roughly a $450,000 ARV when it's all said and done. So all in at about 250, first and second, and ARV at about 450. And in this case, it'll be a short-term loan because the guy's planning on selling it. So it's an example of, not everything fits into one box. If you're looking for short-term money, and I know there's a lot of people out there, and you don't want to be in something more than maybe six or 9 months, we have those kind of opportunities, and this is a perfect example of that specific scenario. So that's one. Let's see here. Which property is this one? This is in Melbourne.
And on that property at $50,000, say for a term of like 1 year, we'll probably draft it just out of convenience, just in case, so we don't have to tap you again. But we'll probably mature, within that time is, $416 a month. You become a passive lender in a collateralized lending opportunity, $400 a month. Where can you earn, that rate of return for $50,000? Can't go buy a rental, that's for sure.
That's right. Here's an example of what we might want to call an equity loan. They're in a little bit of financial trouble, had some health issues. They owe $65,000 on the first mortgage. They need roughly $20,000 to bring that note current. And then their plan is they would like to sell this one as well. So it might be more of a short-term note where we lend them the money to bring the note current, and then we help them sell their property like the other one. They also may decide that they want to stay in the house, so we could convert that note into a longer term note. Normally, we're going to do a 3-year interest only type situation with somebody in this situation if they're trying to stay in the house. So our goal is to really, really help them. And when you're doing that, basically we're giving them options, but we can do that because they're going to be in a house at about $85,000-$90,000. That'll be the total loan to value. The value on this property is really closer to about 210, maybe 220, totally renovated. So another really, really good low loan to value position with someone who is very eager to, one, keep their equity, but to work with us if the equity loan gets tight on them and they are in a situation where they just can't make the payments anymore. So obviously we're reaching out to these folks in the beginning, talking about buying their property, and they just don't want to sell it right now. So this is another great example of a $25,000 loan, roughly somewhere around there, that will be in the second position, really good interest rate. On top of there, I think this interest rate was 4% on their first. So we'll be all in at 90 for a house that's worth 200, 210. So again, I'm not a math genius, but loan to value, that's a great number.
Yeah, I mean, these positions had so much cushion in them. It's a bank quality position. Why don't these people go get loans from a bank? Well, they fall just outside the strict guidelines for them to secure financing, and for them to have a 3% mortgage. Pace Morby did like $1 billion in deals just like this. So, proof in the pudding here.
Yeah. Here's one in Georgia. This is a bailout loan, basically, or an equity loan, where they owe $250,000. She is $20,000 behind. The property, again, it's in foreclosure right now. They're, like I said, $20,000 behind, so they're 8 months behind roughly, or whatever. But the equity position, again, you're looking at less than 70% on a house that is in really, really good condition. So another less than 70% loan to value, high interest loan on a second position where the owner wants to stay in it. They are very eager to work, within the means that we can, solve this problem for them. But they also understand, listen, if you can't make your payment, we got to sell this thing. We got to get rid of it. So there's what a lot of people don't understand is that we are working directly with the seller, and if the seller misses a payment, they don't want to lose their equity. So they're not going to let it go to foreclosure. They're going to call us on the phone and they're going to say, hey, I can't make the payments. I didn't get the job I thought I was going to get, or whatever the situation is, they just can't afford it. They don't want to lose the equity. They're going to call us on the phone. They're going to say, what do we do? We're going to tell them, we got to sell this thing. If you don't want to lose all of it, don't make us foreclose on you. We got to sell it. That way, everybody is protected. And that's kind of the difference between, a lot of other folks that might be in the bailout loan business, so to speak. We are working directly with the seller, and they don't want to lose their equity. So we're back in a situation where 70 cent or below loan to value on a house that needs virtually no work, and a great interest rate, again, protected, on a lien position, but also further protected by a seller who doesn't want to lose it in foreclosure. And we've already prepped them in a way that you've got to call us, you've got to get us involved, because we can help you keep some of that equity, even if you have come up with an issue financially and you can't make payments.
So worst case scenario on a property like this, we foreclose or help the seller sell their property and we make more money. There's potentially low risk involved in this strategy if it's structured correctly, at the end of the day. And we approached these individuals not through just trying to lend them money. We were trying to buy the house originally. They didn't come apply for a loan. We found them because they needed, they came up on a list and we approached them or found a referral of them not wanting to sell the property, as we approached them to buy the property, and ended up creating a backdoor acquisition scheme at a high rate of return with the second lien position because their equity. So, helping them stay in the house, and, if worth to come to worth, we make more money.
Yeah, the great thing about this is that we really are helping people. We're telling them from day one, first phone call, do not lose all this equity, to a foreclosure when you don't have to. And a lot of times we are literally talking to folks that owe 50% of what the current value is. This is a perfect example. This one in Jacksonville, Florida. This guy really started out with, it ended up becoming kind of like a financial plan. He's an educator. He lost his job. He was, making six figures, lost his job, got a little bit behind, but he only owes $370 on this house that is legitimately probably worth $600. It's an amazing house. He only owes about $5,000, back to the bank on a redemption. But he's like, you know what? I ran up my credit cards and I've got 20 grand in credit card bills that are, 29, 30%. Can you do something for me? So in this case, we're literally going to help this guy who would never sell this house to us. He was going to sell it on, before it ever foreclosed. He's not that far behind. He would sell it on his own. But because we came in, now we're going to lend him $25,000 to pay off his credit cards, get his credit, back into a tremendous position. It'll be an interest-only 3-year note, like most of these are. And in 6 to 8 months, he's going to refinance this thing, get rid of the second mortgage and get back into I think his mortgage was his first mortgage is $2,000 a month, and it's at 3%. He's just not, if he doesn't have to, he's not going to get rid of it. So another perfect example of somebody that, we reached out to and we're interested in buying their house, and they're like, I'm not selling you my house. So we have an opportunity to lend them money and still be in a tremendous loan to value position with a really good interest rate. And they're now on our side that there's no way I'm going to lose this house. So yes, I agree with you. If I can't make that payment, the guy flat out told us, if I have to, I'll get a second job. I'm not losing my house. Understood. But worst case scenario, if something happens, he's going to call us on the phone and say, okay, what do we got to do? And we'll help him sell this thing. So these are the kinds of phone calls that we're getting on it. These are, basically today's calls. And we probably got another 8 or 9 of these that we haven't talked about on today's Zoom. But it's a really well positioned second lien.
So this is a pipeline. In other words, we'll have multiple of these deals, have access to these deals for a long time. 3% mortgages and people with high equity upside is not going anywhere. These people are, falling into hard times because of the huge consumer debt going on right now, higher prices on, virtually everything. So, picture perfect opportunity for us to capitalize and still help out the individual.
Yeah, and Alden, we didn't even talk about one of them that we had an attorney call us. Basically, he's a retired trial attorney who has, I mean, millions and millions of dollars in assets. He's got multiple houses. Matter of fact, he owns 4 houses. 3 of them are paid for. The one that he called us about, it's worth $4 million. He's got a $800,000 first mortgage, and he's having trouble with that mortgage. He owes about $300,000, and he is trying to sell assets to pay it off. Well, he found us, and again, that's a big loan. But when you're looking at loan to value, we'll be in that loan with the first at 800 and the second at about 300. He'll owe about 1.2 million on a $4 million house. He is not going to lose that house. He's in the middle right now. He's like, I got 2 cars I could sell that are classics that would pay that thing off. He said, I just need to buy a little bit at a time. So we're talking about a high interest loan with a very low loan to value, that could be a 3-month, a 6-month note, and it's gone. And I know you've got a lot of folks out there that they don't want to do 2 or 3 years. They need to be more short term. Something like this checks those boxes for them. And we get these kind of things all the time. I mean, we literally probably are seeing 4 or 5 of these type of deals every single day in several. We operate in about 6 or 7 states right now, so there's definitely volume.
And it's 20,000 to like 100, or what's kind of the higher end that we see? Was that 300 that he
Well,
needs?
300 is definitely the highest. Normally, we're not going to do that, but his house is worth 4 million. So, this is what we're seeing around the country. You bought your house 15, 20 years ago, right? COVID hit, 2.5%, 3% interest rate. So you decided to refinance, and they did. And then 2024 hit, and the economy slowed down, or you lost your job, or people get hurt, that kind of thing, and they are struggling making the payments, but they've got all this equity. So all we're doing is we're kind of filling the gap for them, where nobody is going to lend somebody that's in pre-foreclosure money. You cannot, you got a 450 or a 520 credit score because you're in pre-foreclosure. You can't go to a traditional bank and get it at a regular 8% HELOC in this case. So they're desperate. They're doing everything they can to try and save all that equity that they got. And all we're doing is we're solving a problem for them in a situation where they wouldn't sell us their house anyway, right? So we're really just kind of helping folks get through a rough patch and keep a majority of the equity that they built up in their property.
So for the people that have been following us, put your blinders on here, okay? Equity-based lending. This is not about the borrower so much. This is purely based on the equity in the property. Okay, so lending docs and things of that nature, don't so much have so much validity as, our seller finance transactions go through formal qualifications for them to fulfill ability to repay. Why? Because it's not a high equity cushion position, and we're dealing with a new homeowner. These individuals have sufficient equity in their property for us to deem a risk mitigated and low risk investment strategy to parlay with our capital investors. So, collateral files are really going to be on the lien positioning the details of the property. We'll obviously use an attorney or title office to validate all information required to mitigate the risk at the end of the day, so you don't have to go out and find opportunities like this, vet the program, figure out how to structure the documents correctly. This is chef to you on literally a golden plate today. So we have already set up attorneys and title companies in order to do so. Long time standing track record in executing as the bank. These are bank positions. We're not buying a rental. We're not buying a multifamily complex that needs lift in deferred maintenance. This is literally cash flowing 30 days after acquisition with 70% loan to value. And if we foreclose, we make literally more money. So that's banking on our long time relationships with contractors, long time relationships, new relationships with Jason and Todd, my father's relationships in bottom up construction and creative finance, subject to purchases. These are literally once in a lifetime opportunities that were never seen before so much. Why? Because 3% mortgages were literally never a thing pre-COVID, and there's millions of Americans that are currently suffering. I saw an increase in foreclosures, I think jumped up to like 10% over the past 2 weeks. So there's people in need for lending of this caliber, for us to originate a position at 18% and then parlay that rate with our investors at a passive rate of return, from $20,000 to $100,000 on average. Talk about the passive diversification capability of a doctor, a lawyer, or a dentist, who's making great income and needs a quality pipeline to place their capital. Why? Because the stock market's more volatile than ever. AI's shaking up literally every industry in the nation. And here we are, collateralized lending, providing insulated returns from inflation, tariffs, artificial intelligence. People need money and there's equity in their property. What else? What more could you ask for at the end of the day? What are your thoughts, James?
I think that if we look at the scope of investment in the U.S. market on capitalizing on the ever increasing debt that is being consumed, the average consumer, if we just look at the basics, there's millions of consumers out there that are holding credit card debt. And I think that's one of the things that it starts from. And with credit card debt, as Jason happened to mention one of the first people said, yeah, I'm paying 29% interest on these credit cards. And just keeping up with that, plus the house payment, it becomes unbearable. And they end up falling into foreclosure. Currently, there's been, you could do a chat GPT. I wonder what the amount is, but they probably raised billions of dollars on Wall Street for personal loans. So if we seek out the people that invest in companies that provide personal loans, a personal loan normally is not affixed to a property. A personal loan is just a personal loan based on someone's credit score and their ability to repay based off their income and so forth. So normally the lenders that are out there, and there's tens of thousands of them that pitch to small businesses and private individuals, hey, are you behind on your credit cards, or you need fast cash? It's actually the payday loans, if you've ever heard of payday loans. And they're on every street corner. Hey, you need a loan to get through payroll, until your paycheck comes in. Those are personal loans, and they're doing it off your credit and your job, if your job is your credit. The cool part about this business model is that one extra piece, which is affixing a lien to the specific property to help guarantee performance of your payment of your loan to get it paid back. If we really look at that and we take that step back, we really realize we just need to target that investment strategy. This is an offshoot of just a personal private loan. This step is a personal private loan with a lien position on a specific property. But as I say that, it really makes me understand there's a monster market for it. We just started marketing with Jason in regards to that because that's their specialty. That's what they're working on. And it's a very intriguing and very enticing opportunity because you get that lien position on a property. So I think that there's a really big opportunity. I think there's real capital that's there. I think, personally, I think for the big scale, it's related to investment houses that already provide personal loans. And those companies, as we pitch them, and as this video even goes out to companies that are like that, it fits their specific wheelhouse. They're looking for an X-rated, they're looking for an X return, a specific return. And normally it's just on the person's personal credit and their ability to repay, but it's not really attached to a property. We're adding that property attachment to help ensure that we're going to get paid back. So that's something to think about. It's just a mental mindset of that added piece that we're doing by putting a lien position on a specific property.
So we're starting to approach this in the fund. Our objective is to raise $10 million tranche for these types of positions, providing our accredited partners 10% return for a 1-year term or 12% for 3, where we ride in a per unit owner share in a portfolio of these low risk investments out in some of the top markets in the nation, with sufficient equity cushion for us to have a low risk investment strategy. So we're excited, to say the least, about our new partnership and the opportunities that we have available to us. These are not seen anywhere in the nation outside of possibly, right here. Most times you got to pay for an education piece or a mentorship or join a paid mastermind. This is free, unfiltered value. We're actually providing you a backdoor view of the deals that we're doing almost on a daily basis. I think Todd and Jason have us trumped on the amount of transactions going on at any given time. But we're catching up here. So we're happy to provide, deal flow, qualified deal flow that hit benchmarks, that hit risk mitigation, and to provide, even you a view of our daily operations and all the above, to say the least. So, accredited investors, we're currently taking capital. We don't have to hit a $10 million raise. Super unique. I could take as low as $50,000 today and help you start cash flowing in as little as a 30-day program. I have an investor that just committed this morning from 50 up to 100. So we'll see how that placement goes in the fund and where we deploy. At the end of the day, because, our objective is to diversify. And how do we diversify? Into assets from 20,000 to 100, and start stacking cash flowing assets in a time when it's needed most. We've got a couple other deals going on. I've got another short-term first lien loan that we have on a manufactured home that I debuted at Inland Empire Real Estate Club. This property I actually walked through on live and negotiated with the owner. Actually gave you a view of what that looks like as far as live negotiations. I'm going to share my screen here real quick. But the photos are a little blurry because I took them from a video. Sharing my screen. Boom, boom, boom. So we've done upwards of $2 million in transactions in this community with CalAm properties. So affordable housing, is the caveat at the end of the day for lien positioning in these communities. And this is seen on mobilemailboxmoney.com. It's actually 2 double wide that I actually negotiated for a purchase price of confidentially $11,000. So this property is in decent condition. You got a decent yard, all this fencing is going to have to get removed. Central AC unit. It is a little bit older of a home, but a home just like this and its as is condition could go for upwards of $50,000 to $75,000, depending on the buyer and how we exit this transaction. The benefit here is to provide a seller finance component. So we'll seller finance this transaction at a double-digit interest rate. On say 75,000, the buyer puts say 5,000 down, just for rule of thumb. And if you don't have a mortgage calculator, go ahead and download that right now. So Carl's mortgage calculator, 75,000 is the purchase price, 5,000 down potentially at a double-digit interest rate that we originate at for a 20-year term. So the unpaid balance could be prospectively 70,000, cash flowing 870.46 a month for 20 years. You ever ran a mortgage calculation and look at the summary? That freaking total interest received over 20 years is $138,000. Passive, being the bank and the collateralized lending opportunity with no maintenance, management, tenants, property taxes, insurance, no trying to figure out what your net operating income is the end of the year, contractually agreed upon return. So you could buy this whole note actually when it comes available, or facilitate us a construction loan to first right of refusal on this property. We're looking for a $50,000 loan at a double-digit interest rate for say a term of 1 year at 50,000. That monthly payment is $416.66 a month, and then you could get the first right of refusal of the $800 cash flow that comes available. And if you are familiar with the mortgage calculator and have ran that calculation live, you know how attractive that interest rate is, as well as in comparison to the seconds. So this is just one of the many deals that we have going on right now. People love the first right of refusal programs. Why? Because they're looking to have long-term capital, possibly for retirement savings in 401k, a solo 401k or IRA, or even just for personal investment. So, with terms as low as 1 year on $50,000, providing diversification to say the least. So this is located at 400 West Baseline Road, Tempe, in a institutionally owned community by the name of Calam Properties. I think I got an investor to commit to that yesterday at the Inland Empire Real Estate Club. So we're working through a soft commitment on that property, or I may pull him into one of these seconds. So depending on what kind of capital he's working with, I think it was like 30,000, so 20,000 below really what we need on a property like that. So maybe pulling him over there, Jason, on that second for 20,000 bucks. We'll talk about that with him today after talking to his IRA custodian, which throws a little wrench at any given time. As we come to realize, investors with IRAs or solo 401ks, there's a process. There's a way about directing those funds. And for the people, the laymen that may have not directed an IRA into an investment like this, it's important to understand the timelines. So if you don't have an IRA custodian or a relationship already, and your money's in, say, a money market account, to find a custodian and sign up with them, enroll with them, could take about a week and a half. What do you think, Sonny? Is that accurate? For a new relationship with someone that has money in a money market account could take about 2 weeks, week and a half.
10 days to 2 weeks. 10 days to 2 weeks is about right.
So if you
By the
have
time you pitch the company and have to fill out all their forms and have their funding done their way and everything, it's a process.
So if they have
We do it.
already in an IRA account, say with directed IRA, who we recommend, shout out to Nate Hare and all of their associates over there, or one of the various other IRA custodians, and they already have money in that account, right? Liquid. They don't have to sell another position. They have $100,000 in that account. Sonny, how long does it take for them to initiate a contract?
Initiate the contract only takes 24 to 48 hours, but through the process to the funding is still easily 10 days to 2 weeks, just because of all the documentation and paperwork and funding that has to go on.
Yeah, and they quote like 3 to 5 business days. Obviously, that's contingent on your time and effort at the end of the day as the investor. on positions, it's timing and communication is of utmost importance for success, really in any strategy. And if you're a high net worth investor that's not so much available, a fund investment may be a little bit better for you. That way you're not held to so much concrete timelines. You don't have to so much be readily available for opportunities like that. You could send us $100 to $1 million today, and not have to succumb to concrete timelines such as what we're discussing here today. Donald Trump just came out with an executive order. That executive order actually provides investors with 401ks and other retirement account vehicles the availability to invest in alternative investments. In other words, your 401k is now eligible to invest in funds, real estate notes, second lien positions, and private lending components, which is literally never before seen in all of finance in ever, literally. So for this to be going on right now, and for us to be positioned where we are in the deal flow that we have in case unique low risk investments, now is possibly a better time more than ever to reapproach your relationship with mobilemailboxmoney.com and Silvercrest. Why? Because we have massive deal flow, and to
Alden,
other opportunities is scarce availability. Go ahead, Sonny.
if you're intimidated at all by initiating that type of a transaction, or if you want to just discuss further about how to self-direct your funds, then definitely Mobile Mailbox Money is the way for you to go, because we have a lot of experience now in those types of transactions and navigating them as efficiently as possible and successful for everyone involved. So definitely give us a call if you're interested in moving your IRA around.
Whether accredited, whether non-accredited, whether highly intelligent or layman, or really someone that just doesn't have the time to evaluate these deals, here's your opportunity to hitch your cart with couple qualified operators with 100 years of real estate expertise in creative finance, fix and flip, multifamily acquisitions, subject to purchases, bottom up development, manufactured housing, being the bank, real estate notes. I could go on. Our expertise is possibly puts up to match with some of the best in the nation. And you're catching us at a great time here, even viewing here today as a capital investor, because we're in a growth component. At one point, these deals won't be available. We'll raise all the money that we need to raise. And, that comes, with starting the wheel at the end of the day. So we're happy to provide you a back office view of these available opportunities. We do 5 to 10 transactions a month right now, and that number could quadruple with the right capital partners who understand the low risk investment strategy of being the bank. So that's what we're doing today. Go back and view the podcast, the vlogs, the masterminds, the market data, the analysis, the interviews at Arizona Real Estate Investors Association, the interviews at Diversified Mortgage Expo, the Note Expo, Paper Source, Noteworthy, the directed IRAs Alternative Asset Summit, the SDIRA Summit. Our accolades go on. We're listed in Mobile Home Village, the largest mobile home third-party listing service in the nation, institutionally recognized, from CalAm Properties, Pace Morby, Mark Monroe, Eddie Speed. I could go on. The list is the list. Now's the time to trust the seasoned professionals in the industry and start performing. It's scary right now. Why? People are worried about interest rates. People are worried about their retirement accounts. Social Security is not going to be there to pay your retirement possibly in the next 20 years. Now's the time to get off the couch and stop being a habitual educator, people. You have to take action in order to facilitate a return. And there's risk. There is risk in investment, but being with qualified operators and an insulated umbrella of low risk investment strategies, and providing you the income you need in order to facilitate the lifestyle that you're wanting. I talked to a tremendous amount of people from capital investors investing in different asset classes, from gold, multifamily, single family. Well, there's a struggle in like 4 out of 5 investment strategies right now. Why? Because of interest rates, pricing, and available inventory. There's little to no cash flow availability. Your cash out refinance to go after, opportunities may not make sense. Why? Because the opportunity you cash out refi go to doesn't provide the sufficient return on investment to pay that loan right now. Multifamily complexes, which out of hardship comes opportunity. But there's tremendous amount of investors that are losing real dollars or not receiving any income from their promised rates of return because of the fluctuations of commercial financing and interest rates. They've didn't see stability in these positions and went and invested into multifamily complexes. And, who's laughing now at the end of the day? So to find positions like this, everyone wants a 2x equity multiple until you lose all your money at the end of the day. So to find contractually agreed upon satisfactory rates in bank quality positions, is a true diamond in the rough. Does anyone have anything else to add today for this once in a lifetime opportunity we're offering?
I think our last point is every week there's new deals and new opportunities that come up. So as we even talked to Jason, and he's always on, which is great. There's always something new that's coming up and newest opportunity. They come and go. So the current opportunities that he's talking about are probably good for the week, and those will get cycled out and new deals come in. So that's one of the reasons why we agreed to do a Zoom on a weekly basis, because things are moving and information is moving, qualifications are moving, deal flow is moving. It's all about the opportunity. So definitely stay up to date with us, and that's why we're doing this on a weekly basis.
These deals don't just go to the wayside, just so the viewers know. These deals get done no matter what. These deals get done. So whether you take advantage or not, we're earning a rate of return in positions just like this listed below. So if you have any more questions, feel free to reach out to us direct at 602-888-CASH, or view the available notes we have at mobilemailboxmoney.com and invest today with Silvercrest Opportunity Fund. Come back, view the available masterminds. Join us next week on every Thursday at 12 o'clock Arizona time, Pacific time, here in the Arizona market with our partners in Florida. Appreciate you guys all viewing today and being here. Don't hesitate to reach out and invest today.